Mr. President.
Senator from Pennsylvania.
Mr. President, are we in a quorum call?
We are not.
Thank you, Mr. President. I rise today to discuss the nomination of Judith Pryor to serve as first Vice President of the Ex-Im Bank of the United States. Now, the Ex-Im Bank was established to help U.S. exporters by providing financing to foreign buyers of U.S. products. I have always been very skeptical about the merits of this mission, and I remain skeptical to this day. Ex-Im claims that it only takes risks that private lenders are unable or unwilling to take. Central message of the Ex-Im Bank. We should stop ourselves right there and ask ourselves a question. If private lenders are unwilling or unable to take a particular risk, why should taxpayers be forced to take that risk? And at the same time, Ex-Im also claims it only makes safe bets. Mr. President, that's a complete contradiction. It's impossible to do both. Ex-Im can't only take transactions so risky that no one else will do them, and at the same time, only be doing safe transactions. It doesn't make any sense at all. Fact is, Ex-Im wins business by systematically underpricing risk. That's why borrowers go to Ex-Im instead of any number of private institutions that wouldn't offer deals on the same terms that Ex-Im offers. That's why our largest banks go to Ex-Im for loan guarantees. Ex-Im terms are too good to be true, at least too good to be true in the private sector. And that is evident by the kinds of transactions that Ex-Im approves. Consider just last year. Ex-Im financed a deal guaranteeing an $82 million loan from J.P. Morgan to Qantas Airline for the purpose of buying jets made by General Electric. Now let's think about this. J.P. Morgan is the largest bank in America, one of the largest banks in the world. Qantas is the largest airline in Australia. And General Electric is one of the largest industrial companies in the world. Why do these companies need the American taxpayer to subsidize a deal among the three of them? The obvious answer is they don't. These are some of the biggest, most sophisticated companies in the world, and they have complete access to global capital markets every day of the week. They didn't turn to Ex-Im because they were unable to secure private financing. They turned to Ex-Im because they got a better deal than they would get in a strictly private transaction. Now, as if that isn't galling enough, Ex-Im has now decided that American markets can't meet our domestic financing needs, purely domestic. I remind you, the U.S. capital markets are the largest, deepest, most sophisticated capital markets in the world by far. Anyone with a bright idea and a business plan can raise capital in the United States. They do it every day. According to the Securities Exchange Commission Office of Small Business Capital Formation report, for fiscal year 2021, last year, there were $2.2 trillion in private offerings of debt and equity and $1.7 trillion in initial public offerings and other registered securities. So that's almost $4 trillion of capital markets activities in the United States. That's how big our capital markets are. And then separate from that are the banks. According to the Fed, there are about $2.5 trillion in outstanding commercial and industrial loans as of March 16th. My point, Mr. President, is the United States is not an economy that is starved of capital. It's awash with cash. Nevertheless, despite that, the Biden administration has instructed Ex-Im to develop a new domestic financing program to expand the reach of the bank into a whole new direction. This proposed domestic financing program would support creating or expanding domestic manufacturing businesses and infrastructure projects as long as there is some expectation that some arbitrary portion of the goods produced will be exported. And this can even include indirect exports. So in other words, an Ex-Im finance manufacturer won't have to export a thing if he can claim that his customers will. This is unbelievable. This is well beyond mission creep, as George Will observed in the Washington Post today, this is Mission Gallup. And a program like this clearly subverts congressional intent and strains is a polite way to put the interpretation of EXIM's charter. And it does so to such an extent, really, I think, to make the charter basically meaningless. There is no need, there is no reason for EXIM to be providing domestic financing. None. As I said, we live in a highly developed market economy, like the most developed market economy in the world, and promising businesses have access to capital on competitive terms. And just like all of EXIM's other programs, maybe even more so, the only way EXIM is going to win business in the domestic financing is if it either finances bad deals that the private sector wouldn't touch, or it underprices the risks so that it's more attractive than the private financing. So earlier this month, I sent a letter to EXIM's president and board chair, Rita Jo Lewis, and I requested that EXIM respond to a series of questions I have about this unprecedented new direction the administration wants to send the EXIM Bank. I also asked to withhold board consideration of this domestic financing program, at least until there's a comprehensive framework that is published for notice and comment. Before the board votes to launch this whole new category of business at EXIM, shouldn't we all see, like, how's this program actually going to work? How expansive will it be? How expensive will it be? How many private lenders will be elbowed aside so that EXIM can be doing loans that private banks would otherwise be doing? And none of this has been spelled out. We don't have any answers to these important structural questions about this program. And yet, my understanding is they're going to go ahead and launch this. So I sent this letter. EXIM responded to my questions, but they remained completely silent on my request to withhold board consideration until there's been public discussion and debate about the specifics of this framework. Only 3 days after I got the EXIM response to my question, they noticed a board of directors meeting for April 14th, at which they intend to consider and probably going to approve this domestic financing program. Now, this leads me to the reason that our Democratic colleagues want to push Ms. Pryor's nomination through urgently. See, it's my understanding that the EXIM board needs at least 3 Senate-confirmed nominees in order to change its existing policies, certainly a policy as big as this one. EXIM only has 2 Senate-confirmed board members now. So without Ms. Pryor, they couldn't launch this whole new program, which is a terrible idea in the first place. So that brings me to Ms. Pryor. My concern with her is that she will continue to support, first, what I think is the unacceptable practice of EXIM providing taxpayer-financed subsidies to some of the world's largest and most well-capitalized companies. And I fear that she will move EXIM in the direction of supporting this whole new domestic financing program. Ms. Pryor has previously served on EXIM's board, and during that time, the J.P. Morgan Qantas General Electric deal that I mentioned earlier, it's a deal that she supported. I asked Ms. Pryor a simple question during her nomination hearing, by the way. I said, do these large, sophisticated American companies have access to private capital? She acknowledged that that's a simple question, and she refused to answer it. Now, why would she refuse to answer such a simple question for which the answer is obvious? It's because she didn't want to admit that these giant multinational firms obviously do have access to private capital, to alternative financing. And she didn't want to acknowledge that despite that, EXIM still did the deal. I'm also concerned about another issue, which is the weakening of one of the very few taxpayer protections that's built into EXIM's charter. The charter includes a 2% cap on the permissible default rate. So no more than 2% of the assets on the books of EXIM can be in default at any point in time without precluding future lending. It puts a brake on EXIM expansion if they hit that 2% threshold. Well, guess what? EXIM's default rate has trended towards that 2% cap. It's not quite there yet, but it's getting very close. And that's why the president's budget requests that Congress temporarily waive the cap. So rather than address the problems with Ex-Im's deteriorating book of business, Ms. Pryor and the administration support this deeply flawed request to just double the statutory permissible default rate from 2 to 4%. How's that good for taxpayers? Doesn't sound good to me. Congress has laid out a clear corrective measure in the event that the default rate cap is breached, and that is you freeze the book of business. You acknowledge something's not going right. We've got to fix that problem. Is Ex-Im or the Biden administration proposing to fix the problem? No. They just want to ignore it and just raise the cap, pretend it's not there. So, Mr. President, I will be the first to acknowledge Ms. Pryor is clearly a competent person, well qualified. She's got a lot of experience. That's not my concern about her candidacy. My concern is that nothing in the entire nomination process, nothing in my discussions with her has alleviated my concerns that she would advance this badly flawed agenda, which is badly flawed in multiple ways, as I have laid out. It's also the case that the Biden administration and its supporters need Ms. Pryor now in order to advance this domestic financing program. And for all of these reasons, I cannot support her candidacy, and I encourage my colleagues to vote against Ms. Pryor. I yield the floor.
President.
Senator